Welcome to Hydrogen Rising, a bi-weekly podcast created and hosted by the global law firm K&L Gates that brings you analysis of critical, cutting-edge issues impacting the global hydrogen market. We look forward to your engagement and feedback. And of course, don't hesitate to reach out if you have ideas about new topics you'd like us to cover.
Hello, everyone. Welcome back to Hydrogen Rising. I'm David Wochner, a partner in the Washington, D.C. office of the global law firm K&L Gates. Thanks very much for joining us for episode 17 of our podcast, Hydrogen Rising. As our regular listeners will be aware, of course, one of the recurring topics that we have talked about on the podcast has been the creation and issuance of financial incentives by governments around the world, really, for clean energy and particularly for hydrogen. You may recall back in episode 6, we discussed tax incentives for hydrogen production in Australia with our colleagues down under, Betsy Ann Howe and Clive Keisha. Of course, national governments the world over recognize the important role that the development of green or blue hydrogen is going to be able to play in reducing the carbon footprint and, decarbonizing and meeting obligations under the Paris Climate Accord and future obligations. And it appears now that the United States is beginning to see the light as well. And I have some optimism for the future for the United States. And to that end, today I'm very excited to be joined by my Seattle-based partner, Elizabeth Crouse, to talk about U.S. tax incentives for clean energy and specifically hydrogen. Elizabeth serves as the practice group coordinator for our global power practice and specifically focuses her practice on tax and tax structuring issues for renewable and clean energy projects. I have had the pleasure of working closely with Elizabeth on a number of client matters and know that her insights today are going to be really, I think, interesting and engaging for our audience. I'd also note that this will be a bit of a Hydrogen Rising first. We are going to have a 2-part series on U.S. tax incentives. So this is part 1, and part 2 will be coming in another 2 weeks, and more on that later. Elizabeth, thanks for joining me today.
Thank you, David. It's a pleasure.
Yeah, so let's level set for our Hydrogen Rising listeners. As an experienced energy projects lawyer, can you lay the groundwork for us in understanding the current state of incentives for clean energy infrastructure and production, and to the extent it's relevant or it exists for hydrogen deployment specifically?
Sure, happy to. And let me take the last point first. Currently, hydrogen at the federal level is incentivized as a fuel, okay, for alternative fuel vehicles. And then there's some fuel excise tax credits. It's not much. And frankly, they expire like every year. There was an extension last year, sort of in the middle of the summer, and they extended it for another year. And everyone keeps thinking that these credits are just going to die one day. But on the other hand, there are a lot of other incentives that can be helpful for the hydrogen industry. So, for example, there's clean energy generation incentives, the production tax credit and the investment tax credit. Obviously, clean energy, clean electricity is helpful for green hydrogen, which is starting to get moving a lot more quickly in the United States these days. There are also incentives that are helpful for blue hydrogen. We've got a carbon capture credit at the federal level. It's a pretty good credit, actually. And of course, it doesn't help with the production of hydrogen, but it does help with capturing the carbon that can be produced in the value chain towards production of hydrogen.
I think that's really interesting. Your point, too, about the incentives expiring, the federal legislation offering incentives expiring is obviously not helpful for project developers. These are long duration projects, and they don't get built in 12 months. So I expect that is a recurring issue. We hear a lot of talk, and I know you've worked extensively with what's known as the 45Q tax credit. and that is, I know, kind of the driving force for a lot of the renewable clean energy development in the United States. So let's dig in a little bit on the 45Q. Can you help our listeners understand how 45Q currently operates, and I suppose based on your experience, kind of the types of projects that can qualify, and perhaps more specifically, what the predominance of the projects are that are kind of taking advantage of 45Q, if there's a particular category or subset?
Sure. A little bit of history may be helpful here. 45Q has been around for a while, about 11 years now, and it was previously used by the oil and gas industry to basically add some tech to natural gas and electricity generation also, to capture the carbon and reduce some of the GHG emissions of certain projects. Now, the credit history during its first 10 years or so of existence is a bit checkered, honestly. A lot of people feel that it was abused. A lot of the credits were recaptured because the carbon was not disposed of properly or not removed in the first place. And so it was a bit controversial, actually, when it was extended a couple of years ago and expanded too. And so under the current version of the law, it's a very interesting credit because it's a bit intricate, because there are basically two different categories of things you need to consider, right? How the carbon's captured and how the carbon is disposed of. Both of those things impact the amount of credit that's available. And they also both have sort of small differences in how the credit is dealt with in terms of recapture, whether recapture is even something that you need to worry about, and also how you structure the deals. So there are a lot of different variations that are possible under 45Q. That can be a bit confounding at times, honestly, because you need to know the statute really, really well, and the regs, which were finalized in January, really, really well in order to properly navigate it and set up a project that's financeable, frankly. The point of the expanded credit, which is really interesting, we have a partner in the DC office, Lori Papro, who worked very closely with the Algae Biomass Organization when the credit was extended and expanded a couple of years back to try to get a new method of disposal into the statute, which is utilization. Okay, so let's start there. What do you do with the carbon once you capture it, really? That's one of the biggest single influences in the statute. And there are basically three things you can do with the carbon. One is you can sequester it. What does that mean? Put it in the ground and leave it there. Two, you can use it for enhanced oil recovery or natural gas recovery. Again, you're putting the carbon in the ground and leaving it there, but you're putting it in the ground specifically to get something else out. Okay, that's why there's a distinction. The third option is utilization, which I mentioned a minute ago. Utilization basically is you're going to use the carbon dioxide, usually it's CO2, and you're going to do something with it that produces some kind of commercial product. So, for example, you could, in principle, pump it into a greenhouse. We all know plants like CO2, and that would theoretically help the plants grow better, right? That's one use. You could also do something a lot more interesting, and frankly, you could use the carbon oxide to create engineered rock and stone, which is very interesting, and a potential long-term use of carbon that would not be polluting really ever. You would never really have an issue of, frankly, leakage in the sense that the carbon that you sequester is now going to leak out somewhere. You could also use it to create fuels. There's a company up in Canada that is using direct air capture with the intention of taking the captured carbon and turning it into aviation fuel. There are a lot of other things that you can do to utilize it. The question is market. That's really the problem with utilization right now. And of course, the ABO, Lori's client, was very interested in utilization of carbon to grow algae to turn into a fuel or other products. The other big factor here when you're looking at a project here is you need to figure out how the carbon is captured. Okay? And so carbon capture means something very specific under the statute. And I'm not going to bore you with the details. But needless to say, carbon has to come from somewhere. And so the obvious place for it to come from in a lot of contexts is an industrial facility or an electricity generation facility. For example, if you go burn coal in a power plant, you're going to produce carbon dioxide among other GHGs. Same thing if you're producing natural gas, for example. There's going to be some carbon dioxide that's put out in the air unless you capture it. You can also use the 45Q credit for direct air capture. A lot of people scratch their heads, what the hell is direct air capture, right? Really what it is it's, I think the New York Times put it as a carbon vacuum in an article a couple of months ago. That's maybe simplifying a bit, but ultimately it's sucking air into some machinery using large fans and then using catalysts and various other mechanisms to pull the carbon dioxide or the carbon atoms out of that ambient air and then do something else with them, whether it's pumped into the ground or it's utilized.
And in terms of the direct air capture, I mean, are there multiple technologies? Are there companies that are advancing multiple technologies for this? Because we don't hear, I mean, you and I are familiar with it because we have clients working in the space. And Lori, of course, Purpuro, who you mentioned and who's been on the podcast in a previous episode. But I think a lot of people are not, as you said, are not really familiar. So does the technology exist?
Oh, yeah. And it's commercial. Not commercial in a way that we're going to see direct air capture springing up in every city in the United States, but it is commercial. There are commercial applications, let me put it that way. There are three real big players in the world, and that's Climeworks, which is a Swiss company, Global Thermostat, which is a US company, and Carbon Engineering, which is the Canadian company I mentioned earlier. They all use broadly similar technology in the sense that there are large fans that pull the air into some equipment. I don't know a whole lot about their actual intellectual property, not that they would tell me anyway. But ultimately, they all are using some kind of catalyst to pull the carbon out of the air. Now, there are other technologies at the university stage. There are a lot of different ways of capturing carbon from the air. But those are the only three companies that are really commercial at this stage. And they're early days still. Climeworks is probably the farthest along. They're building a plant that should come online soon in Iceland. Carbon Engineering has partnered with Oxy and a few others down in Texas for a plant that's, to my knowledge, I'm not sure that they've broken ground on it yet, but it should be done sometime in the near future. And the Global Thermostat, I believe, has a small plant. So, but I think ultimately, right, the people who are listening here probably want to know, why am I droning on about carbon when we're really here to talk about hydrogen? The point of 45Q in the hydrogen context is that particularly when you're producing hydrogen from natural gas, there's going to be emissions. Okay. And we've got this interesting inflection point in history where more and more people on both sides of the aisles all over the world are talking about reducing greenhouse gas emissions and also wanting to have products available to them in various applications that are quote unquote green. But we're not there yet in terms of tech, and we're not there yet in terms of cost. And so we're at the point right now where we need to come up with ways to make products that are less impactful on the environment that can still be used cost effectively. And so hydrogen made from natural gas, steam methane reforming, or whatever process you use, there are emissions there, but if you can hook up carbon capture equipment, you can capture that carbon. And as long as you have a place to put it that makes sense, you can get the credit, which dramatically reduces the cost of taking that additional step to make your stakeholders, whoever they may be, happy. I think one note on 45Q and how it works and where it makes sense. Right now, carbon capture is still very much, the projects that we see are still very much the same as the first 10 years. It's natural gas processing. We have a client that's going to install some carbon capture equipment on a very large LNG plant, for example. There are projects that use it basically to take carbon capture off of electricity generation. Those are often paired with EOR because some of those plants are in areas that are oil rich. There are a couple of companies that work extensively in that. We are starting to see in this country the potential for direct air capture in the near future, but we're not there yet for 45Q purposes anyway. It's possible to use carbon capture equipment on landfill gas projects. It's possible to use it on renewable natural gas projects, digesters that are processing cow poop into renewable natural gas. But I'm not aware of a whole lot of those applications that are actually being used. And the issue, the pressure point, in my view, it's not only supply versus demand, which is sort of one of the basic points here, right? Anytime you're going to use anything other than natural gas to produce hydrogen, it's going to be a lot more expensive. But it's also scale. Right now, hydrogen applications tend to be very large. You need a large volume. Same thing with carbon capture. You typically see it in large applications. These smaller applications like landfill gas, for example, it's harder to qualify under the credit as it's currently written because of requirements for how much carbon you capture. It's also harder to find a way to get rid of the carbon. So where are you going to put it if you're looking at a landfill gas facility in, Vermont, right? Never going to be very big. And so you've got to have someplace to put the carbon. Well, if you don't have a convenient geologic seam to shove it into, you're going to have to sell it to the concrete plant that's putting carbon into their concrete to make it stronger. Or you're going to have to sell it to somebody running an algae pool. There aren't many of those. So there's still some tension there. And it'd be interesting to see the government maybe take some steps to incentivize some of the use applications for carbon, even beyond just fixing the permitting regime for sequestration.
That's, really helpful context. Also, super excited. It's the first time we've talked about cow poop on Hydrogen Rising. So fantastic. Thanks for taking us there. You talked a bit about the complexity of 45Q, and I think that's important. And, you mentioned some of the limitations. So maybe, kind of round us out a bit here. Take a look at what's next. So I know just a few days ago, U.S. Senator Tom Carper, a Democrat from Delaware who serves as chairman of the Senate Environment and Public Works Committee, proposed new legislation that provides incentives for hydrogen. Can you outline for us how the legislation, as we've seen the draft, to date, would help the hydrogen industry? Is it an overlay to 45Q? Is it totally separate? How does it function? And then, I guess kind of point two is, are there other critical pieces of legislation kind of pending right now?
So this is really exciting. The text that Carper released is frankly pretty awesome in my view.
Nice.
And the reason why I'm that enthusiastic about it is because his office seems to have really been thinking through some of the issues. And clearly they've been talking to people in the industry because there's some pretty practical issues that they're addressing head on. And I know that there have been efforts in DC by some members of the industry and the renewable energy industry in particular towards getting some credits for hydrogen that makes sense. And so I'm really happy to see the product here. And so just to get down to brass tacks, right? What they've done in this bill is they've sort of combined some of those efforts that have been swirling in DC for a little while now. There's a PTC and an ITC option. For those of you who don't do renewable energy, let me explain briefly. The PTC is the production tax credit, and the ITC is the investment tax credit. The production tax credit is tied to electricity produced by a qualified facility and then sold to a third party at its most basic. And so your credit arises from operation of the facility, basically, electrons produced. The ITC, on the other hand, is upfront. It's up to 30% tax credit based on the amount that you spent on qualifying property. So the simplest example really is a solar facility. And so the money that you're spending to install those solar panels and a few bits and pieces of ancillary equipment, let's say it's $100, currently you'd get $26 back from the IRS when you place it in service. Whereas the production tax credit, because it's tied to production, there's a time limit. Basically, you get credit for 10 years. So what Carper's bill is doing is it's basically importing those concepts into the hydrogen setting. So the production tax credit for hydrogen is based on production of hydrogen, kilograms of hydrogen. The investment tax credit, they've used a provision in the code that basically is a backdoor to the production tax credit. which allows the taxpayer to either say, okay, I want my credit over some period of time, or I want my credit now based on this different metric.
And in terms of the PTC for hydrogen, and maybe you were going to get there, but is there a distinction between, say, green or blue, the form from the source from which hydrogen is produced?
Yeah. So that's basically where we start to get into reflecting on the fact that Carper's Democrat.
Got it.
The credit for hydrogen is based on GHG emissions. Okay. There's sort of a ratchet based on how much you're reducing the GHG emissions based on steam methane reforming processes for producing hydrogen. There are a couple of different things here that I think are interesting. I mean, first of all, creating some kind of a schedule like that should be more appealing to the Republicans, right? Because the rate is tied to GHG emissions. But there also seems to be some pretty thoughtful consideration here of some of the tension around supply and demand for hydrogen, right? The supply right now is predominantly manufactured from natural gas, okay? In order to increase demand for hydrogen, we need more hydrogen, frankly, and more applications for it. But natural gas to hydrogen with steam methane reforming is not exactly green in fuels, meaning of the term. And so you can, under Carper's proposal, you can qualify for the credit basically by incorporating carbon capture into the process, because that'll reduce the GHG. You can also, there's also a nice little provision in here, particularly because it allows you to take into consideration some of the GHG emissions from your feedstock. Now, it's buried in the proposal in the section that tells the IRS to go forth and make regulations. But it's a very interesting part of that because, for example, we have clients who want to produce a green product. But if you're looking at producing LNG, for example, there aren't really any incentives. There are not even any real industry incentives like certification standards that allow you to say that I'm producing green LNG. Well, this would give you credit for it if that LNG, or let's just say natural gas generally speaking, is produced by a plant that incorporates carbon capture. And then you take the natural gas, put it through your hydrogen process, and that hydrogen process is also capturing GHG, whatever that might be. You have a product at the end of the day. I mean, that's pretty close to, I don't know, blue-green hydrogen.
Shall we say? Teal or aqua.
Indeed, teal or aqua. Hydrogen, right? So particularly if all the carbon and whatnot is being put into permanent sequestration, it's kind of hard to argue with that. And so what I like about this part of the proposal is that Carper's office is certainly thinking about how do we help the industry to bridge the gap between SMR and green hydrogen. How do we get there? And so that's why the full amount of credit is available for technologies that are reducing GHG emissions by 95% relative to SMR. But there's still some credit for other efforts. It's not going to be as impactful, but it's there.
Thank you for that. I mean, the explanation was excellent and also very clear. I think because this is so new, there's going to be a lot of interest in how this would play out. There, of course, is a ton of market conversation right now about green versus blue. Of course, what we should be thinking about is really carbon intensity, right? As opposed to kind of just, we have this color nomenclature. And I think some concern that the price of green hydrogen with the advancements in technology and the price coming down of electrolyzers, I think there's a legitimate question in the marketplace about whether we should even pursue blue hydrogen, right? Should you pursue the production of hydrogen through steam methane reforming with carbon capture if 4 years from now, the cost of electrolyzers are going to be such that green hydrogen is the way to go? Interestingly, it seems to me Carper's legislation potentially levels that playing field a little bit, right? And allows for at least, in the shorter term, the advancement of blue hydrogen projects incorporating carbon capture. So that's extremely helpful. And I think also a great segue for me to provide just a hint for our next program and in this two-part series on U.S. tax incentives, which we will release on June 16th. During that episode, we will be speaking with our colleague, Mary Burke-Baker, who leads our tax policy practice in Washington. Mary is truly the guru of all things tax-related on Capitol Hill. She spent years at the IRS and then as an advisor on the Senate Finance Committee. So I think she will be giving us some great insights on the current legislation that we just talked about, and prospects for passage of Carper's legislation and any others that are pending. So with that, I think we'll close up today's discussion. Elizabeth, very grateful for your time and your insights. It's been a very interesting conversation here on Hydrogen Rising.
Thank you, David. This has been a pleasure, and really happy to talk through these things. It's a really interesting time for the hydrogen industry, and particularly the green hydrogen industry, but the industry generally speaking too.
Yeah, no question. And thanks to all of our listeners for joining us today. If you like what you hear on Hydrogen Rising, don't forget to subscribe wherever you listen to your podcasts. And of course, click those 5 stars in your podcast app. If you have questions about the issues we talked about today, particularly Senator Carper's new legislation, please don't hesitate to reach out to me or my partner and guest here, Elizabeth Crouse. You can find us on our website at klgates.com. And of course, stay tuned for part 2 of our discussion on Hydrogen Rising in 2 weeks' time. Thanks again. Bye-bye.
Thank you for listening to this episode of Hydrogen Rising. Be sure to subscribe to receive timely notifications of future episodes and check out our market-leading publication, The Hydrogen Handbook, on our website at www.klgates.com.